Hello again, this is Alex with MasterChartsTrading.com, and this is a market recap for Friday, June 1st, 2018. So first of all, please hit the like button and also subscribe to this channel, and that would be much appreciated. So we'll pretty much do the same thing as always. We'll look at stocks, utilities, high yield debt, treasuries, bonds. Dollar index, I think it broke out, and I think gold will probably come under severe pressure pretty soon. But for now, the gold bulls and bears are just fighting it out. Oil looks poised for a push lower, and natural gas is around $3. Looks like a good shorting opportunity. And then we'll finish off with Bitcoin and other cryptos. Alright, let's start with S&P 500. S&P 500 futures. This is for now again a bullish chart. The reasons are multiple, but number one reason is on the 26th of January of this year. This is a fresh all-time high, and after that we had a kind of like a sharp pullback, and since then we've basically been trading sort of in a range. Why I don't think this is a chart to short is because of the way this pattern looks. We have a fresh high and more or less a normal pullback and a back and forth. So after a really strong run, you can see we can expect a time period of consolidation. So I think that from February, till now, basically we've been consolidating in this area. But I would not short this chart. I would only look for buying opportunities. And in fact, I just sent to my subscribers on the 30th of May, right there, I sent an alert to be buying this chart. And I'm thinking that we're probably going to go to fresh highs, unless, of course, something else happens. And when we get to Forex, foreign exchange, the currency action, I can see that there is a lot of things that are happening in the currency markets, which are in turn affecting the stock markets from around the world, actually. So for now, again, I'm treating this chart as bullish. We have small caps IWM leading to the upside. This all-time record highs just literally today. Will we get a pullback? Probably. But again, I would be buying this chart on a significant pullback. And what do I mean by significant? For this chart of IWM, if I was trading it, I would be looking to buy around this blue resistance, support resistance lines. By the way, you can find out more about these 4 lines in the chart by going to MasterChartsTrading.com. You can also ask me questions on TradingView. Send me a private mail. I answer it quite quickly. So yeah, if I was trading this chart, I would look for a pullback to at least 159, but ideally to 153 currently, and then I would be considering going long, considering buying the chart. But for now, this is, if you have a position, and I had 3 alerts here, actually 4 alerts for my subscribers. All 4 alerts eventually worked out because I normally put my stop for equity. For example, this is IWM, this is stocks. I usually actually put my stop well below here on the yellow line. So yes, if you are buying up here, and if you do, the way I'm doing things, you will need to put your stop well below here at 139. So this is a very large risk for a limited amount of reward. So this is why I prefer relatively deep pullbacks towards the blue support resistance line. currently at 153 for IWM. So here's QQQ, the Nasdaq 100 ETF. Again, also a bullish chart. The reason being is because on the 13th of March, right there, 2018, we have set a record all-time high, and record all-time highs and 52-week highs are generally bullish, and your thinking should immediately be in the direction of where do I buy, not where I'm going to look for a top-end pattern and try to time the short on a bullish security like this. If you're hell-bent on shorting and you know what you're doing, then do the opposite. Look for a security that's making new lows and wait for a bounce and then short. But for this clearly bullish chart, I'm basically sending long alerts, buying alerts. So you can see those up arrows, those are all long alerts. So again, overall bullish chart, bullish posture for the overall stock market. The fact that QQQ is approaching fresh highs, IWM already made fresh high, is showing a good risk appetite. In other words, investors are betting that the stock market rally will continue, and additionally they're betting that the small caps and the higher risk technology sector like QQQ will outperform the general stock market. So we got small cap, semiconductors, and biotechs that are leading to the upside. So let's look at semiconductors. Here's SMH, the most popular semiconductor ETF. You can see a big rally here, approaching fresh highs. I personally prefer trading and looking at a diversified semiconductor ETF, and it is called XSD. Also approaching fresh highs. So again, this is a very high risk, high beta sector, and the fact that it is approaching fresh highs again is showing good appetite for risk by the investors. Biotech, XBI, let me see, this is almost a fresh high, right? Yeah, it's approaching fresh high as well, so looks good, looks bullish. I had positioned here myself. I set several alerts as well. So overall, good appetite for risk because, again, biotech and semiconductors are high beta stocks. So overall, this is a good sign for the general stock market. All right, let's look at some of the more interest rate sensitive securities. All right, let's continue to the interest sensitive sectors. Well, first of all, let's look at bonds, and here's TLT. So pretty significant bounce and a very sharp one at that. So from the 17th of May until the 29th of May, this is 1, 2, 3, 4, 5, 6, 7, like 8 sessions and very strong bounce here. So I am currently not as sure if I want to go ahead and short the TLT, so I am basically staying away from this trade currently. I need to look at the price action. Like for example here it was pretty unequivocally bearish. You can see it came up, the price came up and then sold off pretty hard here. So if I was shorting it, I would probably be shorting it here. Right now, even though today on Friday we had a gap down here, we ended up sort of indecisive. This is an indecisive candle. So Monday, I'm expecting maybe a little bit of a bounce still, and then if we come up to this sort of like what happened here on the 17th, let me zoom in so I can show you a little better. So for example, here on the 17th of April, you can see the price came up, touched this red support resistance line, and then sold off. Same thing here, you can see price came up, touched the support resistance, then sold off. So we will see what happens Monday, Tuesday, next week, and then we'll act accordingly. I'm not really in a hurry to short this security. I mean, you could, but shorting is in general a little bit more advanced, and I have a lot of subscribers who are somewhat more of a beginner trader, so I am a little bit more conservative when I recommend shorting whatever it is I'm shorting. And we'll actually get to natural gas, and I'll try to explain what I was recommending to my subscribers, the ideas. So here TLT dropped on Friday. So again, overall, I don't like this chart. I wouldn't be buying it for sure, but I probably would not be aggressively shorting it either. So just kind of staying out of it, basically. Overall, the investment grade bond market, you can see that this one is significantly weaker than the Treasury's TLT. You can see that price barely came up to the red line and then already sold off. So overall, this is a relatively weak chart. LQD, investment grade corporates, even weaker. You can see the price already is below the yellow line. So looks like it might head lower from here. But we need to confirm the price action, especially on TLT. I think TLT is the most important one. So TLT sets the interest rates for the longer dated treasuries and interest rate by extension. So XLU, utilities borrow quite a bit of money to operate for the operations. So they are what's called a interest rate sensitive group. And here you can see that this is a XLU, this is a bearish security, and if you are interested, you can potentially short it at the red line here, support resistance line. So we'll see what happens next week, but if TLT decides to go higher, then most likely if TLT decides to try to re-challenge the highs from the 29th of May, I think XLU utilities may do something of similar nature. And again, we will need to look at the price action if we want to short utilities or do nothing. My gut feeling is probably best to do nothing at this point with utilities. So here's real estate, another interest rate sensitive group, IYR. And this one is quite a bit more stronger than the utilities. And you can see we're approaching this line in the sand, which is currently at 78.77, the blue line, where I would be pretty interested myself in buying that. Right now I'm still, if I was trading it, I would probably be shorting it here. And you can see that there was several interesting opportunities. For example, the latest one was on the 16th of May, and you can see that this one probably didn't really work out unless you are extremely nimble and you just took your profits immediately and then closed the position. Here we're approaching breakout levels, and yeah, if we break out higher, then IYR will likely become bullish, and in my mind it would mean we would want to be buying it instead of selling it. One group I wanted to point out is XHB, also known as home builders, and these guys are really having a hard time, possibly because of lumber prices. See, there's lumber prices. So you can see the lumber is at fresh highs here, and this is putting pressure on the home builders, on XHB. And notice that the price is really, trading around this yellow line. And if I see a close below this yellow line, I would just completely avoid it. And again, if you are very interested, you could potentially short it. But with equity during the bull market, such as it is right now, I would be reluctant to short. But here's XHB home builders. So, if we see a close below this yellow line currently at 38.85, I wonder if this would, the contagion from the home builders may spread to the real estate sector, IYR. If it does, then I'll be correct, and I would be more interested in shorting IYR than in buying it. And now it could go, if we break out above 78.77, then I think we could see further price appreciation for this industry, or for this sector rather. All right, let's see what else we wanted to cover about stocks. All right, let's look at the junk bonds. So here are the junk bonds, J&K, lousy looking chart. This is definitely not a good sign here on February 9th. New low here basically, and then again today and all this week there's pressure. You can see the downward drift in the junk bonds. Again, we're approaching February lows. I think we could easily break those lows and continue lower. And as I keep pointing out, here is a DHOIX, which is a high yield bond fund. You can see that the correlation between stocks and junk bonds is very high, and below here, I keep showing the same chart, but it's worth it, I think. You can see the correlation coefficient here spends most of its time in the positive territory. In other words, when junk bonds move higher, stocks usually follow higher as well, and vice versa. When junk bonds go lower, then stocks usually go lower as well. So what I'm wondering here is that which one would be correct? Is it the junk bonds which are pushing lower and lower, and then eventually maybe the stocks will roll over, or maybe we will see no correlation whatsoever, and eventually junk bonds will just turn around and continue higher. Anything is possible, but my kind of gut feeling is that this should be paid attention. We should be paying attention to the junk bond market, because it's possible that it is reversing, and as a result there could be contagion in the stock markets and actually this is around the world. I've been already reading about the defaults in China by the high yield issuers. So could be, maybe we'll see a sort of a contagion similar to 2008-2009 financial crisis, because really nothing was addressed following the crisis, and pretty much the same policies continue to this date. All right, so let's see what else we have here on stocks and bonds. All right, so we're covered stocks and bonds. Let's continue to the Forex. So let's start with DXY, also known as the dollar currency index. I think we have a breakout here. I think the dollar has turned bullish. So from 28th of May 2018 and onwards, I am treating this index, the dollar index, as a bullish security, and if I was trading it, I would be buying it. I would not be shorting it. You can see that the stop now moved to below this red line. Again, anything is possible, but we can definitely see that dollar is breaking out against versus other currencies. So let me show you some of those currencies. For example, here's euro, and this is probably the most important currency out there next to the dollar. I think this is a bearish break on the 25th of May 2018 here, And now again I have to reverse my thinking, and if if we were trading here, for example, you can see that euro versus US dollar here, up arrows, up arrows here. Even there's an up arrow here on the in March. Should be another up arrow here on the 6th, but then we had a lot of selling, and this selling just continued just straight down. So now we have what I think is a switch into the downtrend for euro versus US dollar. So now we can think about reverse our thinking, and instead of buying, we will be selling, we will be shorting. Where will we be shorting? I think right now would be a wonderful opportunity to just go ahead and short it with a stop. And again, if you decide to trade it in a manner that I'm showing here, you will need a slightly higher, larger account, because you will need to put your stop not that far off, but relatively far off. And this is a daily chart, so you will need to have a sizable account, but not enormous. So it's about 340 pips stop. Now I know it sounds like a lot if you're trading on a minute or 5-minute charts, but on the daily charts, if you adjust your position accordingly and you buy appropriate number of currency units, and again, if you're interested how to do this, talk to me at MasterChartsTrading.com or private mail me. I can explain what I'm trying to say. So you can trade even not with a very large account, you can trade it in a similar manner. So I would be personally thinking about shorting it now, with a possibility of a move to the yellow line or possibly even lower. British pound versus US dollar, same thing. I think we have a breakdown here on the 29th, so now would be a pretty decent time to short it. US dollar versus Japanese yen, I think we had a breakout here on the 21st of May. Quite a bit of selling, but then notice where we found support, right around the red line, and rallied today. So this looks to me like a bullish chart. In other words, the dollar will be winning this battle. And there are some other currencies that are lesser traded, for example, Australian dollar. This one broke down even earlier on the 23rd of April and then continued lower. New Zealand dollar, same thing, on the 25th of April there was a breakdown. US dollar versus Swiss franc, the dollar broke out versus the Swiss franc on the 23rd of April 2018. Let me see what else. US dollar versus Canadian dollar, just a recent breakout right there on the 28th of May. And notice how the price action got caught by these indicators very easily, very nicely. So sometimes all you have to do is just set a limit at the indicators. Notice the price action right there on the 8th of May, and then nice price action here on the 30th and 31st of May. This looks like a bullish chart to me. In other words, the dollar is winning the battle. US dollar versus Mexican peso. Also broke out even on the 2nd of May. Nice move afterwards. US dollar versus ruble. US dollar ruble. Can't really trade it on every forex broker, but on some of them you can. But anyways, again, this is a US dollar versus ruble. The dollar is winning the battle. I think we could see fresh highs. And take a look at RSX. Yeah, still the gap is unfilled, so we'll see where this goes. US dollar versus Turkish lira. I think I pointed out that this is a top-in pattern, so yeah, we're seeing a pullback. I don't really trade this one, but if I was trading it, I would be looking to buy this chart around $4.35. for what is it, liras 35. So again, overall the dollar looks bullish. Looks like we have a breakout, and I think this would weigh on some commodities, but gold for sure. So let's look at gold. Okay, let's continue to gold. Last week I drew these arrows here, so you can see price action again around this blue indicator line. You can find out more at MasterChartsTrading.com about these indicators. The way I'm looking at this chart, and especially with the dollar breakout, I have a feeling we may see more selling. So I think downside could outweigh the possibility of an upside right now. So I mentioned that we can do a straddle, long straddle here, buy a call and a put, the same strike level. That could work also. Now with dollar breaking out, gold here, gold futures, gold could come under pressure, and I think this is already a resistance manifesting itself. Here's GLD, still unfilled, well, semi-filled gap here from 14-15 of May action. This is not a good looking candle. You know, we had a gap, rally, a failed rally, and a close near the lows of the day. Doesn't look good. Here's GDX. I am currently avoiding it. My subscribers are avoiding it, hopefully. Don't like this price action, and I keep saying the same thing. Here on the 27th of February, this is where my line in the sand was, and I would just avoid it from then on. I'm not yet outright shorting it. The reason being is because I'm kind of still not 100% which way the actual yellow metal will go, where actual gold will go. But if gold was to drop to 1265, in my mind that doubt would be erased, and I would be looking to short it, and especially short the gold miners. Right now I'm still a little ambivalent, but I'm more and more lenient towards the bearish case for gold and gold miners. Here's gold miners. Here's a junior gold miners. Also not very strong action either way. Just basically trading sideways. But again, if gold decides to take a drop, I 100% guarantee you that gold miners, and especially the junior gold miners, will follow gold whichever way it will go. Alright, let's look at oil. Here is US oil. I mentioned that oil may be headed to around $61. And you can see that the way this price action is looking. I thought we bounced here, but it doesn't look like we're done correcting. So you can see today on Friday we made a lower low, and I have a pretty strong suspicion we're going to retest this $61 area, where the indicator line is currently located. So here's CL1 exclamation point, also known as oil futures. I would be buying it, depending on price action. I would be looking to buy it around 61 bucks. And you can also do it with the retail ETF, the USO. Not my favorite one, but you know, it's better than nothing if you are interested in trading oil. So for USO, currently around 1246 would be a decent price to consider opening a new long. Energy XLE, yeah, right now, we'll basically need to look at oil, but actually energy looks stronger than oil itself. And for XLE, I would be looking to buy it around 72, maybe 71. $72 would be pretty good. You can see that solar 10 also dropped, and I think it has to do with the fact that oil is getting cheaper, so energy in general is doing the same thing. Alright, let's look at natural gas. That would be NG1 exclamation point. So let me actually look at NGAS. It's just easier to look at this chart. This looks bearish, and I would be shorting it, and we are there currently where I would be shorting it, where I would be interested in shorting it. Now, today's action is actually quite bullish, and I think we may continue slightly higher. If we continue significantly higher to $3.21, then we can see a turnaround, and natural gas at that point could become again in a bull market. But for now, I'm still looking at it from the point of view of a bear market. You can see several interesting opportunities there. All right, let's continue to the cryptos. Here is Bitcoin. Again, unequivocally, well, pretty unequivocally bearish chart. I think the bear market began on the February 4th, 2018, right there. And since then, basically, I would be looking to short with a wide stop above this blue line. For trading this instrument, you will need a larger account because it's so ridiculously expensive. It's approaching already this $6,000 area, and if we break this, support resistance at 63.73 currently, 63,000 or so, 100 rather, 6,300. I think we could just completely collapse, and maybe like even lower to like 3,000. Yeah, I don't see really any even inkling of a turnaround yet for the Bitcoin. Ethereum, another cryptocurrency. You can see a nice breakdown here on the 14th of March 2018. You can see another attempt here on the 26th of April. That one didn't really work out, but again, I would be putting my stop above the blue line. And for this, you may need a larger account to account for a relatively large stop. But here's one recent opportunity on the 22nd of May, and if you shorted it on that same date or even next day, you can maybe get in there. So that's already a as much as 23% drop. It's a pretty good move, I think, for a few days really. So again, overall, pretty much all cryptos are in a downtrend. LTC USD, same thing. Here's a nice opportunity to short around 9th of May. 30% drop afterwards, pretty nice. XRP USD, I don't know who trades it, but notice how weak it is. It's not even coming up to the red line. And if you wanted to short it, then right like there would be a good place on the 16th or 17th of May, right there. And let me just zoom in because it's such a tight trading range. So this one, I don't know if they trade that much, but it's already a 20-some% drop. So even that little, what looks like a very little tiny move, this is a 20% drop. So you could have made nice money on it already. So again, overall, cryptos are in a downtrend. Alright, so that's it for this week's recap. Again, if you want to find out more about my indicators and my services, please head over to MasterChartsTrading.com, click on alerts and indicators, and you can see the various options here. So right now the alerts and indicators are available. I'm thinking about separating the indicators away from alerts so people don't have to listen to my babbling, or you can just simply unsubscribe if you don't want to listen to that or to receive any alerts. It's very easy to do. So go ahead and click on the sign up button here and subscribe for a monthly, or better yet, the yearly, because for yearly you definitely get the best deal. And if you're so interested, you can talk to me over the phone. Alright, that's it for this week's recap. Please share this video if you found it valuable. You can also head over to my social page and click on the various social links that I have. I'm active on TradingView, StockCharts, Twitter, Facebook, YouTube obviously, and StockTwits. Alright, thanks for watching. Have another great trading week. Bye-bye.